I'm Joel Meskin, Vice President of Community Association Insurance and Risk Management. One of the most frequent questions that we receive in our office is, what is a claims-made policy? Many people say, well, why do we care whether it's a claims-made policy or not? Most individuals are used to what we call an occurrence policy. Your homeowner's policy, your auto policy, general liability policy in a business. And the key in those policies for what triggers coverage, the insurer's obligation, is the date that the accident happened. That is not the case in a claims-made policy. Claims-made policies are generally policies used in what we call professional liability situations, such as doctors, lawyers, dentists, real estate agents, and directors and officers. In the directors and officers, to understand the claims-made policy, you really have to understand three separate elements. You need to understand a wrongful act. The wrongful act is what the alleged professional or board member, in our case, has done or allegedly done wrong. Made a bad decision, improperly counted the election ballots, improperly enforced a rule. That's the wrongful act. And that, if you are looking at a claims-made policy, you need to make a timeline, and that is one date. The next issue is, what is a claim? And this is a huge issue in the claims-made policy, because claims-made policies, you really have to review the definition of claims. Some claims, and especially in the non-community association area, a claim is very often defined as the service of a lawsuit. In our world of community association D&O, the definition of claim is usually a written demand for the association to do or not do something, and that would, by definition, include a lawsuit or a petition for arbitration hearing or a petition for mediation or a petition to the Equal Employment Opportunity Commission or one of those. So the definition of claim is very broad. Then you have to understand the reporting obligation, because for a claims-made policy, we will provide coverage for a claim during the policy period that was made by a claimant and was reported to the insurance company during that policy period. And so how does the wrongful act play into this scenario? Basically, the wrongful act, if you have a full prior acts policy, we don't care when the wrongful act happened. It could have happened during the policy period or prior to the policy period. However, there are some policies that have a wrongful act date of the date the policy is issued. You have to be very cautious about this, because you won't be covered for acts that occurred prior to the policy period. So in the general claims made policy, you have to look at when was a claims made for an act by the board, and was it reported during the policy period or the extended reported policy period if applicable.